On July 4, 2025, President Trump signed the One Big Beautiful Bill into law, the largest U.S. tax code overhaul since 2017. But right now, millions of Americans are preparing to file taxes using completely outdated rules, unaware of the new deductions they are legally entitled to. Over the next few minutes, I am going to walk you through 7 specific dollar amount changes you need to claim before the April 15th deadline. If you file under the weight of the old law without understanding the new law, you will leave your own money on the table. The first major change directly impacts service workers. You can now deduct your tip income outright from your federal taxes. This diagram illustrates exactly how much you can claim. You are allowed a maximum deduction of $25,000 in tips, claimed on a new IRS document called Schedule 1A. This deduction begins to reduce if your income hits $150,000 as a single filer or $300,000 filing jointly. The second change targets hourly employees. If you are a non-exempt worker under the Fair Labor Standards Act, you can now deduct the premium portion of your overtime pay, the extra half in time and a half. As the visual shifts to overtime, you can see the limit is $12,500 for single filers, phasing out at those same income levels. Because employers were not prepared to track this separately in 2025, an IRS transition rule allows you to estimate your deduction by simply dividing your total overtime pay from your W-2 by 3. For the first time, service and hourly workers possess dedicated, massive tax shields, specifically protecting their extra labor. The third change creates a brand new deduction exclusively for seniors aged 65 and older. This is a flat $6,000 deduction that stacks on top of anything else you already claim. This graphic shows how the math works for a standard retiree. The new $6,000 block stacks right on top of your existing gray deductions, aggressively lowering your total taxable income. The phase-out for this starts at $75,000 for single filers and $150,000 for married couples. The fourth change affects almost everyone. The general standard deduction has been permanently expanded and is now indexed for inflation. This line graph compares the two paths. Under the old rules, your standard deduction would have collapsed back to roughly $8,000. Instead, it is locked in at $16,100 for single filers and $32,200 for joint filers, moving upward each year. Because roughly 90% of all American filers take the standard deduction, these two rules permanently alter the base tax math across the entire country. The fifth change is a massive quadrupling of the state and local taxes, or SALT, deduction cap. SALT represents the combined amount you pay in state income and property taxes. This bar chart compares the limits. The restrictive $10,000 cap jumps to $40,000 for residents of high-tax states through 2029. Note the red warning indicator here. This deduction begins to phase down if your income exceeds $500,000. The sixth change focuses on business. The law completely restores 100% bonus depreciation for small business owners. As this chart shifts to compare business equipment, you see the difference. Instead of spreading the cost of a purchase over 5 to 7 years under a fading phase-out schedule, you can now instantly write off the full cost of that equipment in year 1. The seventh and final change permanently elevates the federal estate tax exemption to $15 million per individual, or $30 million for a married couple. Whether you are protecting a heavy-duty work truck, high state property taxes, or a family farm, this legislation actively shields large assets from federal reach. This checklist shows the facts: no tax on tips, no tax on overtime, a $6,000 senior deduction, a larger standard deduction, a $40,000 SALT cap, full bonus depreciation, and a $15 million estate exemption. The difference between the old assumptions and the new reality is enormous. And here's the critical urgency. Rules for tips, overtime, and the senior deduction apply retroactively to the 2025 return you're filing right now. Before you finalize your paperwork, pull up Schedule 1A on the IRS website and consult a qualified tax professional to ensure you actually qualify. The tax code has been entirely rewritten. Capturing this legal upgrade is now entirely your responsibility.